Hey, good afternoon. George Cavaligos for HFT Bonds. The president just gave a speech about Iran. That's nice. They're making all kinds of nice there. I'm glad. He also made some comments about the budget and the debt ceiling and what happened to the idea or the art of compromise in this country. Not that long ago, where you'd have both these parties sit down and hammer out some kind of an agreement where nobody gets everything they want, but everybody can get a little bit of something. I think the last time it happened was Newt Gingrich and Billy. What was Billy? Billy Beer. What was his name? Oh, Bill Clinton. Sorry. All right, let's get to the markets. I hope you guys saw the commentary yesterday. We did make some lower lows overnight. And we all know we don't live in a perfect world. And I was looking at equal swings down from yesterday's highs, or the day before's highs, from Wednesday's highs, in a corrective pattern that Elliott waivers call a zigzag. Zigzags want A, B, C down. Zigzags often show equality between the two corrective legs down. A, B, C. C equals A is a very common corrective pattern. Last night, I had thrown up the idea of 133.24 in the bonds and 125.28 in the 10-year. Don't hold me to that 10-year. I might be off a plus or two or something like that. We got close. The bonds went down to 22 and the 10-year went down to 29. If you were awake around midnight to buy them down there, or you left some bids down there, you're a happy guy when you wake up in the morning and the notes are trading, 126.06, and the bonds were trading 133.06. It's a nice wake up in the morning look to the market. So, now what? The bonds double topped at that 133.23 level. 10 years made new highs, but we're back below the old highs by a tiny bit right now. Now the market's not closed yet. We got another hour until 4 o'clock Chicago time. I don't want to see the 10-year close much below the old highs at 10 plus, because then that opens up that old throwover idea where the market made a higher high but then closed below the low, below the previous high, and you got a double top in the bonds. Now we got to be cautious. Monday is September 30th, theoretically the end of the month, the end of the quarter. All this debt ceiling stuff going on. I'm flat right now, and I'll see what happens Sunday night and over the weekend with the news. I'm not sure. I think you're supposed to buy it for one more day to see what happens with the month end. I think that there should be some movement out of equities, some rebalancing out of equities into bonds and notes, but I think a lot of that was already done. So I'm still bullish, but I'm cautious at this point. Let's put it that way. I hope you took some profits on long positions here today. Time to be a little cautious. That's all I'm saying. We've been up a little bit more than 2 weeks now, with only a couple down days. Really, I think we've been up almost 3 weeks, and I think 3 of the 4 down days were Thursdays. Kind of funny. I love that Mark Twain saying. Remember, guys, history doesn't always repeat, but it often rhymes. So, all right, now we'll see. Monday, I'm going to be pretty neutral on the markets. I think it'll be a little bit better. I think the markets will do a little better. I would love to see the bonds make a higher high. I almost would rather buy them on a higher high than buy them here, is what I'm trying to say. How's that sound? Have a great weekend. Time to harvest some grapes. Not making wine this year. We're going to make jelly and jam, so it should be fun. I'll see you guys Monday morning in the morning email and in the chat room.